Rohr here with an early, concise highlight on Friday, December 19th, 2014. It is currently 7 a.m. U.S. Central Time, and it's going to be concise today because quite a bit of what's going on with the foreign exchange is some steady activity even after the explosive moves elsewhere. We refer you back to Thursday's general update and global view for the foreign exchange activity. And what we've had is better data in general that has helped the markets, but also some key macro factors. So, what does all this mean to the markets? Well, maybe you don't need us to tell you that the equities are quite strong on the back of better data, accommodative central banks, and lower energy prices. So here we have the March, now lead contract as of yesterday's close, March S&P 500 future, hourly on the left, 30-minute on the right. And just to get back to some ancient history from Wednesday, what we have is the statement, which the market liked. This may have to be better viewed on the 30-minute chart, right at 1 o'clock U.S. Central Time. Yellen's discussion of at least two meetings that some people were able to interpret as maybe as early as late April, and then her clarification that they're still going to be data-driven or condition-driven, and of course that left the market bid. And one of the key considerations was these highs back up on the previous rallies when the market had come under pressure early this week, these highs up around 2012 or 2010, because there was a significant high on the intermediate term we'll revisit shortly, right around the 2013 level. And that meant that there was a question coming in Thursday morning whether the market could surmount that. And if it could be quite strong. Well, given that it was well above it overnight, out of Wednesday into Thursday, it just gathered more and more buying until it actually opened about $25 higher or more actually into Thursday morning. Never pulled back much below the Fibonacci 2/3 of the overall swing down from its previous high in the March contract up here near 2070 to the trading low into the close on Tuesday at 1963, big swing down, but that put it out above the 2/3 retracement on the opening on Thursday, and the pullback only being to just about that area before the market got the bid back, fueled the bigger rally. So where is it now? It's up another 7 on the day at 2067, so that puts it up near its previous high. And lest anyone forget, the lead contract high was up more so into about 2079 or so. So that would be your next resistances on the way up. Of course, the previous resistances we talked about back at 2060, right around where the market settled, and back at 2050 especially, are now important near-term supports on any near-term pullback. And the other thing to keep an eye on is the fact that from late Wednesday, the market was right up against the upper runaway band on the hourly, and the explosion Thursday has taken it out in the ground where any near-term dips are likely to be corrections that still leave the market bid. But the question is, how far further can it go if it gets through that old high? And that wraps up the short-term view of the S&P 500.